today's edition of Targets and Focus, I'm delighted to be joined by Ankita Dudani, a London-based FX strategist at RBS. Hi Ankita. Now we'll start with Euro-Pound. At RBS, what are your views on this cross going forward?
In euro sterling, obviously, it's driven both by news out of the Europe and UK. Tensions between Athens and Eurozone leaders have intensified over the past couple of days, and price action does suggest that Greek news still matters, and the bridge between Greece and its creditors aren't closing, but time is closing on Greece. So even if it's not about like a straight sell-off in risk or euro crosses, it's surely acting as a dampener to risk appetite. In terms of the pair, euro sterling has been in a very narrow range over the past 2 months, let's say between 82.50 and 84. So because offsetting factors keep pulling and pushing it in both directions. We think euro sterling going forward will struggle to get much below 82 because it's approaching the valuations are looking quite stretched, and it's approaching its long-term fair value, which we think is around 80. So if you do see euro sterling breaking below 82, which we think is unlikely, it'll be at that time we think the Bank of England will get quite worried about the strength of the sterling and will become quite vocal and probably turn more dovish than they already are.
At the moment, dollar CAD is hovering around parity, but what are your forecasts looking like for this pair in the short, mid and long term?
CAD is one currency that we still like amongst the G10 currencies. We still have a long CAD against the dollar position open. The currency has strengthened over the past month against dollar and the yen, but not so much against other G10 currencies. We had the Bank of Canada, which suggested that rates will be left unchanged until the second half of next year. So that's still a long way off, and that has the potential to play negative for the CAD. But that said, if you look at anywhere across G10, and especially in the major central banks, rates are not going anywhere anytime soon. So we still think that the Canadian economy is better placed relatively than other countries. It's still got the AAA rating. It's still it's going to benefit from the Fed lower for longer policy decision because it exports a huge amount of its commodities to the U.S. consumers, and we think the dollar CAD will strengthen over the coming 5 to 6 months, and our low point of the forecast is 96.
Finally, Ankita, like many analysts I've spoken to over the last few weeks, I understand you're not expecting much from dollar yen in terms of breaking out of its current tight range.
No, I think dollar yen has gotten quite interesting. We've seen it take out the tight range that you just mentioned. It was between 76 and 78 since July last year, and today it's trading very close to 79. So that's quite significant for a cross like dollar yen. I think what's driven that is the Bank of Japan surprise policy decision earlier in the week, where they expanded the asset purchase unexpectedly. I think that's sort of to do with they're trying to retaliate to what the Fed did a couple of weeks ago in terms of indicating that rates will be left even lower for even longer. So Bank of Japan is trying to give a signal to the market that they are not going to tolerate a stronger yen, and so does the Ministry of Finance. And they try to move in line with each other. This is what we've seen over the past year. So there is some increased chances of an intervention from the Ministry of Finance as well, given that Bank of Japan has just moved. So we think that there is some upside in dollar yen up to 80 in the near term, but it's really going to struggle to break above that, because for that to happen, we need rate advantage to move in favor of the dollar, and that's not going to happen, as the Fed said. Rates aren't even going to start to rise before 2014. So we think some room to get to 80 in the near term, but beyond that, our forecast is for dollar yen to stabilize around 78 handle.
Thank you very much for sharing some of your latest FX forecasts, Ankita. Now, there'll be more editions of Targets and Focus next week, but for now, goodbye.